Hi, everyone. Welcome to this week's installment of Mish's Market Minute. I am your host, Mish Schneider. Thanks, StockCharts TV, for hosting me as always. Very busy day as I'm recording here on actually a Wednesday. And so I thought, since there's been a huge move up in the markets that not every sector participated, and those of you who have been watching my videos know that I've talked about the diversion, particularly in transportation, which was what I covered last week, what it needed to do and has not done. So now we're getting all the bears coming out there. So I thought this would be a good time to do a deep dive into the macro. Is this the beginning of the end for the bulls? I'm not saying it is or it isn't. Let's look at the evidence and where we should potentially be putting our money as we go forward. So what I'd like to do is cover the indices and the modern families. The outliers, I may actually add volatility to that because I don't believe that I have that there included in terms of my list of symbols. And we're going to go into commodities and Bitcoin in particular in terms of the cryptocurrencies. So here you can see all the symbols. We can add to this second column here, VXX. We'll take a look at that as well. Okay, let's get started. So let's start with the diamonds, which were actually, interestingly enough, as I'm talking to you, they're a little bit of the outperformer here. They're down on the day, but not by very much. But what's so interesting is, so remember last week, we also talked about the fact that we wanted to use 2 standard deviations when it came not only to the price points here on the price chart, but also on the real motion chart. And that we'd be looking for some levels of divergence where we might touch down on the bottom Bollinger Band, break below the Bollinger Band on the real motion chart, and then come back through. So right now, what we've got going on here is we're on the 50-day moving average, number one. Number two is we're sitting right on the bottom part of the Bollinger Band. And number three is we've broken down under the Bollinger Band here as far as the real motion indicator. And of course, this has been underperforming the benchmark for quite some time. So as far as we can see right now, with this well under the 50, but this still holding the 50, you really do have one of two scenarios developing here in the Dow. Either we see this Bollinger Band come back through, the dots come back through the Bollinger Band, and this hold. That would actually be an interesting signal with a very, very good risk against that 50-day moving average. But we also have to have some patience here, and hopefully by the time you see this video, it'll be resolved, because the opposite could also be true, which means we break down under the 50-day moving average, we break under here, and we keep going south on the momentum. So if I had to choose at this point, and I really don't want to go there too much until we take a look really at all the outliers, which would of course include bonds and all the different types of bonds. But if I had to choose right now, I'd still say there is the potential for this to actually have a little bit of a fake out breakdown, and we can see the real motion going back over that Bollinger Band. And if that's the case, then it might be not quite such a bad sell-off, more of a correction. Now, if we move over to SPY, looks like very different picture here. Now you can see this momentum has been declining for a while, and I've been warning people about that sort of divergence. Here you've got your Bollinger Band coming in. Your Bollinger Band's all the way down here. So remember, we had a high Bollinger Band that worked really great as resistance to show that we were overbought. And also we had the relative strength showing that we were extremely overbought. And I talked about that a little bit last week. And now as we're coming off here, momentum is declining much more rapidly than the price. And we're still very far from the 50-day moving average. So keep a couple of numbers in mind here. First of all, we'll see if this actually touches down on this Bollinger Band as the week goes on and breaks it and comes back through. That would be good. Otherwise, if it can't and this starts to break down even further, we'll have to see what happens here as we get closer, not only to the 50-day moving average, but this bottom Bollinger Band here, which means we could actually see a move down to 440, 439. Or like I said, if the momentum starts to come back and we hold that 447, 448, then again, this might have been just a gentle correction. Evidence is not there yet. Now, as far as the NASDAQ goes, of course, that has been the leader, and we've seen a lot of working out of overbought conditions through time rather than through price. Is this going to be different Perhaps. So let's take a look at what we've got here. In terms of the leadership, well, it's not showing it there, but in terms of the real motion, we're down to the 50 here. And so we're at a critical point momentum wise, and we're probably at a critical point price wise. That 380 has been somewhat pivotal in NASDAQ. And of course, a lot of the NASDAQ stocks have been the real leaders, particularly the ones that are in also the biotech industry. But we've seen these incredible moves in Apple, in Amazon, in Google, Facebook. And so right now, those things had been so overvalued compared to the rest of the market that it'll be interesting for us to watch to see what happens at this point. Now, if it breaks down under this whole sideways action that we've had, which is really basically, if we look at the low of, let's say, 378, then we have some support here at around this Bollinger Band at 373. But if we break down under the 50 here and the momentum continues to go south, it's possible. The last time we actually really had a situation where we had a kind of a major sell-off was back in August, and we went all the way down to 360, 359. That would be interesting because that's where the Bollinger Band is. So again, would I be running into anything at this? Well, I shouldn't say anything. There's always going to be something, but would I be running into thinking that this is just another one of those buy the dip type of situation? Again, we see evidence that most likely not, but we also can't say with any real assurity that this was the top and this is the end of the bulls for a long time. We don't know that at this point. Now, finally, since we have IWM as my granddaddy and what I have been focused on with you all for a long time now, that never got through the 50 in real motion. And also it never really actually got to new all-time highs the way Qs and SPYs and diamonds had. Well, diamonds not recently, but certainly the Qs and the SPYs. This is the industrial and manufacturing side of the economy. There's a reason why he's the granddaddy of the economy, the Russell 2000. However, we are going down in momentum. We're pretty darn far from this Bollinger Band. Look how we touched it here just at the same time we came back through price, which gave us that first rally. So now if we're going to have a kind of a repeat situation, considering how weak this has been, we got more downside, which would assume that we're going to break down under this 222, and we'll see where we go from there. That, of course, being the 50. Now, it's also got a negative slope on that 50. So that 222 is really important. We break down under there, this will definitely head south. And maybe at some point we'll see that situation that we saw here, where it hits a bottom and then starts to turn around. 204 has been a really extremely important level, and we're still pretty darn far from there. How would this actually change? Would have to be a rise in momentum back to the 50. And then, of course, we would have to see this hold the 50 at 222. And probably at this point now, until we took out, let's say, 230, there wouldn't be much other than chop. Now, let's move on to the rest of the modern family. We've got retail. This is a really bad sign here, and we've talked about this too. Went right to the top of the Bollinger Band, broke the 50 actually as of Friday. This was Tuesday. This is Wednesday as I'm talking to you, September 8th. And look, now we're getting somewhere where we're touched down and actually broken the Bollinger Band here. We haven't gotten there in the price yet. So if we wind up going down to this low, which was 91.50, let's call it, and coming back through there, then it's possible that retail had already its correction and can go back up. However, the opposite happens and we break down under that 91.50, then I think we have a situation where, again, in the consumer sector of the market, we got ways to go. Now let's have a fresh look at IYT, because when I talked to you last week, it was still kind of trading up and down around the 50, but it was not clearing the key resistance. And of course, you could see the momentum was still really, really super weak here. And so what's going to happen right now is that we're going to have to see what happens as it gets closer to the Bollinger Band. Same thing here, but 250 is going to be a pretty key support level. If not, then we're going to start looking at what happens here at around 247, 248. But more importantly, if you put it all together, exactly what I always talk about is I don't care how strong growth stocks are. If you start to see the modern family weakening as we have, then you know eventually gravity takes over. So either we're heading into some level of support here, like I saw in retail, like we're seeing here, 191 in, 91.50 in retail and 250 here in transportation. If those hold, great. If they can't, then I'd say get ready for a little bit more pain. Now, just to finish up the modern family, of course, we have biotech, which has been stronger, obviously, because of Moderna and some of the drugs related to the variant. However, this was a topping pattern. We did make the 10% move here, and yet we're also not really doing very much except gently moving down. So in this case, we have to really look at the momentum here, and the momentum is coming back into support. So at this point now, again, everything will always sell off in a situation where, and I say everything, I mean equity related, will sell off in a situation where the market is just in for a heavy overdue correction. But if 171, 170 level, I'd say really 170 level holds here, and it goes back down, and we don't really break down under this momentum indicators right here, under the 50 and the 200, then perhaps that would be a good situation, at least for the biotech. So I wouldn't do anything right here, but I'd see what happens at around 170. Now, KRE, the financials, have really been underperforming also for a while. And we covered this a while ago in terms of the KRE really had to kind of get back through the 67.50 to prove itself. Now you can see momentum waning, sitting right on that 50-day moving average. If that breaks down, again, we'll probably be looking more like at 62, 63 level. And we see what happens here. The Bollinger Band, you can barely see it. It's right on the zero line. But that would be another situation to see if perhaps this breaks down under the Bollinger Band, comes back through, just as this may test this Bollinger Band here closer to 63 and come back through. And again, these are levels you should be writing down, because if they can hold and break, then we'll definitely be heading south until we have a fresh look. And finally, semiconductors. Of course, the chip shortage hasn't really impacted this too much, but we do see that this broke down under that 50-day moving average actually a couple of days ago, and now we're heading down in momentum. And this never got through the top Bollinger Band, and we just broke all this sideways action. So again, 50-day moving average comes into focus, 261. That's pretty far down, but we'll see what happens at that level as well. Where would I feel differently about semiconductors? I'd say at least we'd have to get back through 270. Okay, so that kind of covers the macro in terms of the indices and the key sectors. Of course, there are always other sectors we can look at, like real estate, which is actually up because the yields are down still. Utilities, which are up in this type of situation. But I only have a limited amount of time, so we're going to move on to the outliers. So here's your TLTs. This is your 20 plus year long bonds, broke down under the 50-day moving average. Still sitting here on the 50-day moving average here on the Bollinger Band. So that's interesting. Actually, momentum up a little bit. So we'll see what happens. Obviously, the labor market has been the big Fed focus. And with the market going down, it would not be crazy to potentially see the Fed coming back in, talking again a little bit more accommodatively. And so if that's the case, then you would have to see this get back over 148. If it can't, I would be surprised at this point that we would start to see yields rising in this environment. But nonetheless, this would be a real key, because if we start to see this back over 148, especially 148.60, and then confirm back over that 50, especially if momentum continues to behave, that might send the signal to the market. Don't worry, because the Fed's still there. They're not going anywhere, which leads me to junk bonds. Because this I have called over and over and over again, this playground of the Fed. Now I have on my junk bond chart, and it could be just sometimes this happens where if I put a underscore before, let's do that, because this really looks different from mine. And that is because my 50-day moving average is much closer. Okay, so now I made it look like mine. So basically what I did was I put an underscore in front of the junk, because I wanted to really show you consistently. So this 109.50 level, well, first of all, why junk bonds? Because this is high yield that you get on companies that have junk, right? They're not really performing well. Their balance sheet is relatively weak. So it becomes the ultimate risk on environment. If people are buying junk bonds, then they're bullish basically overall the environment, the economy, and also the stock market. So we had a long period of time, except for this correction back here in early July, below the 50, where it's been doing rather well, particularly on the weekly chart here. It's still above all the weekly moving averages. So that would be the last area of support, would probably be $1 lower. But nonetheless, for the short term, to see if we have more pain, it's got to hold this 109.50. You could see the momentum is definitely weak here. So if we break down under this 109.50, then I think we can start to see maybe a move back below, testing this level here. And this 108.50 on the weekly chart becomes the very big key here. If it holds and we do this sort of situation where it breaks down and comes back through it, that's one thing. And I wouldn't necessarily trade these. I use this for information. And if it can hold, then again, that's definitely not a good sign for the market, in spite of the Fed's good intention. Now, we did have a tremendous exodus out of the high grade corporate bonds. So these are your bigger companies. I read that there was a tremendous exodus out of this yesterday, right here, and you can see the price break. During the pandemic, I watched this carefully, because if investors are exiting from high grade companies, high grade bond companies, then that also tells you that the people are starting to get a little bit nervous. So we're under the 50, which is still sloping up. We're under the 50 in the real motion. We're above the Bollinger Band in the 200. So we're going to be looking at these levels here from 133 to 134 to see what happens. And of course, if it gets back through 135, that would probably be a good sign, particularly, like I said, for those growth stocks. Now, if we move to the dollar, which I believe I may have to put a dollar sign in front of, let's see. Nope. Okay, we're going to look at this through UUP. If we look at this through UUP, so you can see that we had this big breakdown, and then we popped back up actually above the 50-day moving average and above the 50-day moving average in the momentum. So the momentum is still strong. Sometimes the dollar becomes the safety play in these type of situations, and particularly since cryptocurrency has sold off, that doesn't surprise me. However, is this really going to do very much for the market? I don't think so. I think that actually some of the commodities have been going up in spite of what the dollar's doing, because they're on their own fumes, which we're going to talk about momentarily. And also, I do believe here that the dollar could continue to chop around, but the overall trend, particularly if you look at a weekly or a monthly chart, unless we really get back through in DXY, it would be over 94, 94.50. This is just noise. And that's how I'm looking at it right now. But that doesn't mean we couldn't see a little bit more upside. So that's going to put the kibosh on maybe some of the precious metals, but they're hanging tough considering the overall market is going down, and particularly the Russell's down over 1% as I'm talking to you. Gold is basically flat. We're going to get there in a moment. Now, I did a whole thing on commodities yesterday for your daily 5. So but I left out oil. So let's talk about oil. Today, there was a big announcement made by Biden administration that by 2050, they want to have half the nation fueled by the sun. Well, we do know that that has certainly inherent issues, distribution costs, et cetera, et cetera. So the question is always going to be, at what point do people stop using traditional oil? And right now, well, we had hurricanes that certainly didn't help the price, and we had some oil problems basically in Louisiana. But when I say it didn't help the price, I meant it didn't hurt the price. And so right now we're trading at about in terms of dollars per barrel, somewhere between 70 and 72. And we're back over the 50-day moving average. So again, what information can we find? Well, here was that great reversal trade right here where it went through the Bollinger Band, came back up through the Bollinger Band, and then popped up in the price over the Bollinger Band. That's the classic mean reversion trade. What we got going on here right now is, can this hang on to 48.40, which happened to be the low of today and the 50-day moving average? And if it can't, if the variant is going to have any kind of longer term effect, and if this solar energy situation turns out to be something that can actually really turn the tide, then you would start to see this break 48.40, possibly break down under here under the 47 and start to head south again before we have a fresh look. Otherwise, if we get a second close over here, and particularly if we can get through 50, I think that oil would also be on its own. So now let's go quickly to gold. I covered a lot of this yesterday, so I do recommend that you watch your daily 5 from yesterday. I talked about the fact that we're heading into the 200-day moving average support, that real motion actually is stronger, the momentum that what we're seeing here with this price underneath the 200-day and now underneath the 50. However, 168.05 is important. Keep that number in your mind. If we can get back through that 168.05, then I think you could probably say that 165 is really your area of risk. And I still think longer term that gold is going to be something that's going to go back up. I think at some point, all these things that we're seeing, all this inflationary stuff that I'm not going to have time to show you today, but like in aluminum and copper, I'll show you that, nickel, lead, zinc, natural gas, I don't have this on the board for you today, but that's gone crazy. And the possibility that oil can take hold, even sugar is hanging in there. This still tells me that gold is still so undervalued, especially when you compare it to the rest of the market. And if we do get any kind of dovish statements out of the Fed as a result of a bigger correction than what we've got going on here, then gold will start to play some catch up. So keep that in mind. Now, I did not show the miners, so let's just look at that. The miners right now are underneath the 50 and underneath the 50 here, but yet a little bit stronger in momentum. Looked like they were going to really fail, and now they've come back over this sort of midpoint in the Bollinger Band. So I think this is pretty simple. You really got to watch here this 50-day moving average. You get two closes, let's say over 33.40. You could probably risk to underneath 32, and that would be a good sign for the miners. But right now, they're just hanging in there. I don't see a clear trade, but I would be more friendly than not. And in silver to me, they say in inflationary times, the rule of thumb is that silver outperforms gold, but we're not seeing that here. And I covered this too. And when I talked to you last week, it was down here. You had this big pop, didn't quite get through the 50, and now we're coming back down to the support around 22. 21.20 is my ultimate level of support. If we don't get back down there and we start to move back up, look at all these gaps we've had in silver, but I would say if we can get back through, let's say 22.70, you could risk down either all the way to 21.20 if you want a longer term position, or at least to under 22. And right here, just be patient and do nothing. Now, I thought it would be good also to take a fresh look at copper. The JJC is the sort of ETF for it. It's a very thin one, but nonetheless interesting because this is breaking down today as well. We had two closes over the 50 and then a failure as of Tuesday, and now here we are at Wednesday. So once again, let's see what happens down here at the Bollinger Band around 2050 if we get there. And if that coincides with breaking the Bollinger Band here and a reversal, then copper could still be good. Copper is definitely in shortage, but yet we're not seeing it reflected there. The same thing with steel. Steel futures look good, but steel, US steel, does not. So right now we're breaking down under the 50. We had exited this position a while ago. We were only holding a very small position anyway. And right now what you can see here is the Bollinger Band. So this is going to be interesting to me. I still want to watch this very carefully because if we break down or touch the Bollinger Band or break the Bollinger Band and come through as we've broken down here under the 50 and come back through, I would have no problem being a fresh buyer on steel. That's probably, of everything I've shown you now, the most interesting one in terms of its timeliness. And same thing with wood. This also had an inside day, well, not quite, but it broke down a little bit after making a new high. See how great these Bollinger Bands work out? Now we had the gap lower. We're back below the 50 on this. So wood is coming off a little bit here. However, you still have real estate prices doing well here, but wood has come off. Unfortunately, people who go buy wood are not really seeing that reflected in terms of the actual physical lumber. But nonetheless, this still overall is still in a big long-term bullish phase. It's just chopping around with the rest of the market. And then I feel we need to look at the grains. You have a big USDA report this week. I've been interested in getting back in possibly soybeans and possibly wheat. I showed all of this to you, and corn is up and soybeans are up, not wheat. But right now, I would do nothing. Now, a problem with the USDA reports is that sometimes it flies. So if you were going to pick an area, at this point, I don't see it. I'd almost rather, again, show you, just like I've shown you over and over again, a breakdown of the Bollinger Band, maybe a touch here at 1877 against the 50-day moving average, a breakdown under the Bollinger Band here with a reversal, and then I think you have a better trade. If you wanted to look at them individually, I would say probably most likely the most interesting one right now is soybeans. And last, I said I was going to show you VIX. So let's look at VIX real quick. Okay, so VIX had no breakdown under the Bollinger Band here. You can see that we broke under the 50 and now we're back up. So we're seeing a real divergence here in the volatility, where the momentum is strong in the volatility, but the price is just now starting to come back up to test sort of this midpoint. Now, every time people have said, oh, that's it, look, volatility is going, the market's over, it's come down and crashed again. I saw a really cool picture of an alligator where the SPY was reaching to the top of the mouth of the alligator's mouth was wide open, and VIX was reaching the bottom of the alligator, and they said, boom, if those jaws close. I thought that was a great metaphor, but the point is right now is that this is at a critical level too, little into resistance right here. This is showing the momentum is positive, but you got to see the price. So at this point now, I would say most likely, if we can get back through, I'd even give it a little room, 2750. Of course, we have the 50-day moving average here, but that would tell me that everything that we said on the either or situation in terms of the macro has come to pass. And now let's talk about Bitcoin. So you had that flash crash yesterday after the news of El Salvador. I really think that it was more just a lot of massive liquidation that happened so fast, and a lot of the exchanges couldn't handle the load. But nonetheless, we are well above the Bollinger Band here, above the 50, sitting on the 50-day moving average here. So where would I say the worst is over? Well, right now we're getting an inside day, but we had a huge range yesterday. And so I would probably say at this point, 44 is key. If 44 breaks, even though we traded down to 42, and some say that actually went to 40, but if 44 breaks, let's use that number, then I think we probably can see a more substantial correction here in Bitcoin, which would probably be a great buy opportunity, 33, 34. If it holds here, however, and gets back through 48, 49, we can even safely say 50, then I think you'll see the buyers coming back in. Bitcoin and everything right now is having trouble sustaining any kind of rally. That's just the environment, like I said. So it'll be interesting to see how the week progresses. So that's it for now. I hope this was helpful to you and plan your next steps. We are heavy in cash at this point, getting out of a lot of our positions last week. And we're going to stay that way until we have more clarity, not only about the commodities market, but also about what happens here with the macro and particularly the IWM IYT. All right, thanks so much for watching. You all have a great, happy weekend. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.